Thank you so much for everyone joining. It's really awesome to see you from all over the world, coming and gathering on a Saturday. Different time zones, different time of the day for you. So I really appreciate that, you're taking this time. I'm sure that this session is going to be a very, very valuable session for you. So without further ado, I will pass over to our great moderator, Mariam, to go ahead and take the session.
Thank you, Susan. Good morning, everyone, and depending on where you all are joining us from, good afternoon and good evening. Welcome to the second roundtable conference, and today's theme, everybody knows, is the financial crime and virtual currency theme. If you've been following the TCAE post, you know that this session is based on the pre-submitted questions. We received a lot of questions and consolidated all of them, but in the interest of time, we've only picked up the questions that were repetitive and which was more common. And those questions will be posed out to our industry experts here who are going to answer the questions for you. But if you still have any more questions, you can always go into your chat box and submit the questions. If we have time, we will definitely add those questions into our session, obviously time permitting. Just a heads up that this session is being recorded. Also a disclaimer that today's session is based purely on the speaker's personal opinion and thoughts, and it's not going to reflect any way in the views of their employers. So before we start the session, I'd like to briefly introduce myself first. My name is Mariam Salahuddin, and I have been working in compliance for almost 10 years now. I came to Canada 7 years ago and started as an AML analyst, and currently I'm working as an AML investigator excuse me, with an international bank. That being said, I will introduce our speakers today. First, we have Amber Scott. Amber is a compliance geek with a passion for technology, and I'm sure a lot of you on the call already know her. She brings in a lot of financial compliance experience, which includes insurance and mutual funds as well. And she is the founder, CEO, and chief AML ninja of Outlier Solutions, Inc., which she founded by herself in 2013. Outlier specializes in AML and privacy compliance and provides anti-money laundering solutions to Canadian reporting entities. Our second speaker is Stephen Brent-Sargent. He is the Deputy Manager, Investigations, provides consultancy services to industry-leading cryptocurrency exchange, which is Bitfinex. And he previously acquired his AML experience by working for an international bank as an AML investigations manager. He is a professional speaker, moderator who enjoys offering in-depth training to AML and compliance professionals and organizations looking to gain insight into the intersection of cryptocurrency and AML and to amplify their personal and organizational brands. Our other speaker is none other than Melanie Lefebvre. She is an experienced anti-money laundering investigator with significant, sorry about that, Melanie. She's a very experienced anti-money laundering investigator with significant experience in cryptocurrency industry. She's a blockchain and cryptocurrency subject matter expert and has worked for multiple virtual asset service providers, and currently is working on the AML and law enforcement investigations team with Bitfinex. Melanie has also published numerous articles with ACAMS and ACFC. You can always go ahead and check those, which have been identifying money laundering and terrorist financing risks on current and upcoming cryptocurrency technologies and solutions. All right, so without wasting any more time, I think I'll just head on straight to the first question. This question was a very popular question that was being asked, and recently we saw that FATF published a report on virtual assets, red flag indicators of money laundering and terrorist financing. And to be honest, I think it couldn't have come at a better time. And I'm sure that the audience would love to hear your thoughts about it as well. So based on that report, the question from the audience to the panelists is, were there any indicators that stood out to you both in a good or bad way? Maybe Amber could start with that first. Maybe you can take first stab and then we can move on to Stephen and Melanie.
Sure. For the most part, I think when you read this, it was incredibly well done. It was incredibly well researched. I think for anyone that's in the Bitcoin and crypto space that is looking at this, it's hard to read it and say, well, they don't get it. They don't understand what's happening in the space. There are cases from so many different jurisdictions. There's different types of cases. There's different types of indicators. There are certain places where I didn't love certain aspects of the way that the indicators are written. and some of what's happening. And part of that for me is that there's a focus right now on wallets that are unhosted, so where you hold your own private keys. I think that's a really interesting point of tension that's going to remain relevant for the foreseeable future, just in terms of whether that's an indicator from a suspicious perspective, simply because a lot of users that have been in the cryptocurrency space for a long time do choose to hold their own keys. They do choose to use unhosted wallets. One of the pieces that I thought was particularly interesting is that there's a place where it talks about using a paper wallet or another type of unhosted wallet to bring virtual currency across borders. To be really frank, I think that is probably one of the things that made me fall in love with Bitcoin when I first heard about it, because I have so many friends and family members that have escaped from various jurisdictions with the clothes on their back, and in one case, a gold coin hidden in the diaper of their 1-year-old baby, because that's the only thing that thieves didn't steal from them on their way to the refugee camp. So the idea that someone could escape a really terrible situation and be able to have this string of numbers written on a piece of paper or in their head and be able to arrive in a new jurisdiction with a little bit of wealth, with a little bit of independence, I think is one of the most fantastic use cases. So while yes, there is a use case there for criminals as well, I think it's incredibly important to keep in mind the humanitarian and just benefits of some of these elements. I think it's important as we evolve in terms of our ways of thinking in AML, in terms of our strategies, that type of big picture thinking is going to be absolutely key to make sure that we're implementing things that are effective, but not stopping people. You know, we want to obviously assist in terms of identifying and catching the criminals, but I wouldn't want to criminalize a refugee bringing their money to Canada, for instance. I think that we ought to be encouraging that piece of it as much as we can.
Yeah, absolutely. Melanie, would you like to add something to that?
The suspicious indicator Amber brought up is specifically the one I had an issue with as well. The use of unhosted and decentralized wallets. To give the audience perspective, using, I'm just going to refer to it as a private wallet. Using a private wallet, whether it's a paper wallet, which means it's just like your address is written down on a piece of paper, as well as your private key, which is like your password to allow you to spend funds from your address, which is like your bank account. Like all that is jotted down on a piece of paper, or a hardware wallet, which is same thing, but it's something that you can connect and disconnect from the internet at will, which is provides a lot more security to your funds. That's standard. It's not just standard practice in the industry, but it's recommended. So I didn't understand this indicator why it was included when you're assessing money laundering risk, when you're trying to assess if a certain indicator, if something specifically is suspicious, the first thing you're going to look at is what's common behavior for this industry, what's common behavior for this product, what do generally, like what's expected activity and what's, unusual activity, right? And this is not only standard, but it's highly recommended. If anything, keeping your funds on a regulated exchange or any hosted service, that's highly discouraged. Most of the time, new users to the industry are told, if you want to do any trading, go ahead, put your funds on an exchange, do your trading, but then immediately take your funds off, because exchanges, as some of you may seen from news reports, they kind of have a good history of being hacked. So putting them in a private wallet is a lot more of a secure method. So I didn't understand this indicator at all. But one good thing I did like is the report highlighted one of the main issues with cryptocurrency is how fast transactions can be executed without being stopped, and how fast they can cross jurisdictions. In some of my cases where I've dealt with law enforcement, I've had some conversations where essentially they're trying to track this criminal activity, and they keep jumping from exchange to exchange. Some of them are in France, and then they'll move to an exchange in United Kingdom, and then one in Seychelles, all over the place, and getting a mutual legal assistance treaty to get that information from the FIU from that specific country, to get the information from that exchange can take up to a year, and that's like a small amount of time. That's good timing. So imagine having to track this criminal down, and they've hopped from jurisdiction to jurisdiction. It'll take you like 10 years before you finally, get down to the information you want and where you can finally track down where the funds finally are. But I'd love to hear Stephen's thoughts.
I was actually going to talk about private wallets too. No, I'm joking. Actually, I was quite excited that there's finally a report. I know many of us in the industry. There's so many talented people on this call right now that are participants. So I encourage them to start the conversation first in the chat, because there's people from around the world working for FIUs and some of the top crypto exchanges. So I encourage you guys to jump into the chats and get talking. But I think if you worked in this industry, it's finally nice to have a public report that you can kind of speak to. I think a lot of our stuff that we did was in private reports. We couldn't openly share it with other industry professionals that weren't in crypto. So I'm actually glad that there's a report. We can point to some of the things that we're seeing at our exchanges or with other blockchain companies. But I think the biggest thing right now with all the changing regulations around the world, especially in Canada, and now we're seeing in the EU, is the operating of illegal money service businesses. So we're seeing many of these jurisdictions move ahead with their legislation and regulatory systems. Many of the exchanges are trying to pay jurisdictional arbitrage, where they're jumping from one country to another country that has lax, maybe AML policies when it comes to crypto. But we're going to see a lot of people that were conducting commercial activity on like local Bitcoins or local meetups that were making a profit. Now you've seen in the US, a lot of the I'd say law enforcement is going after these people that are considered operating unlicensed money service businesses. So I think that's the biggest thing where we have to look at what kind of activity are the customers doing. Is this recreational, you're doing 1 or 2 transactions, or do they have a local Bitcoin profile where you can actually see this person's conducted 5,000 transactions with 300 different partners and have a rating of 99%? Because I think right now, those are going to be the ones that we have to focus on.
This is why I love having you, Stephen, on the panel, because I'll nitpick like the tiny little things I don't like, and I love you reminding us, like, look, at least there's something.
Something we can go off and talk to other people about. There's a public document. I really appreciate it, actually, that.
Amber, you have something to say? Can't hear you.
Oh, she can't unmute herself, Susan. I made that mistake. Don't mute yourself. You're not able to unmute.
All right, there we go. I was just trying not to slurp my coffee as someone else was speaking. I wanted to add to that, just in terms of money service businesses, that's not a crypto specific problem. We have a ton of unregulated money service businesses in Canada. One of my clients took me out onto the street one day and she's like, you see that sign in the window of that video store? That's an MSB. You see that convenience store right there? That's an MSB. They send funds. None of those addresses are registered with FINTRAC. I sit on the advocacy committee of the Canadian MSB Association. And one of the things that comes up often from members is that we just don't have enough enforcement in Canada. So we have a number of businesses that are not compliant to regulation. Although I did learn at a recent event in Montreal that there has actually been action, at least against at least one business that was not at all registered. And I think there have been a couple more cases that FINTRAC has mentioned. So slowly but surely we're seeing that, but definitely something that exists in the traditional financial space as well as in crypto.
Yeah, definitely. Those are really good points. And while we're on that topic, I think I'll add this question in between. So this was the question from among the audiences. Probably Melanie and Stephen can answer that because they're already in the investigation field. When conducting an AML investigation, what are some typical red flags that might be related to cryptocurrency based on your experiences? And also as an investigator, what has been your biggest challenge when conducting an investigation involving virtual currency? So Melanie, would you like to start first?
Yeah, definitely. Definitely. The report kind of highlighted some of the more common ones we do see, which is, creating a new account, depositing funds, and immediately withdrawing them either in the same currency or a different one, which is known as flow through activity. That's a pretty common indicator. I think the majority, however, we deal with is it'll be an alert brought by chain analysis where we'll see that the user has darknet exposure, child abuse, sex material exposure, so OFAC exposure. Adverse media is also a big one. So those are usually how we get our cases. But usually kind of the big tipper towards if it's suspicious or not is our communication with users. Their responses are, they range quite widely. There is always a sick mother or father in the picture, which is why they can't provide anything. So that's, I think, one of the biggest challenges, obtaining the information we need, especially if you, for the majority of exchanges, the majority don't KYC all their users. They have like more or less like tiered verification systems. So getting that information from users can be quite the challenge, but also just assessing the customer's profile. Like let's say they're using all privacy features, virtual private networks, encrypted email address, they're using privacy coins. It's going from high volume. They have no online presence. You have to be able to assess it from an objective point of view instead of just immediately, trigger happy going, oh, this is suspicious because they're hiding their identity. Like personally, I'm very pro privacy, but being able to make that determination and keeping up with all the new coins and tokens, the new projects, the new companies being launched in the space, keeping up with those to have a full understanding of when the user provides proof of source of funds, being able to make a determination, does this make sense based on what I know? For instance, if a user tells me, oh, I've been a miner I've been mining Monero since 2014 when it launched. And I have a mining farm full of ASIC miners to do this for me, which is why it's such a high amount. That if you're familiar with Monero, that would cause you to raise an eyebrow because Monero is ASIC miner resistant. For those in the audience, an ASIC miner is essentially, it looks like a big box, and it's with a computer chip that is only dedicated to mining. This computer can do nothing else except mining. But it can do it very well. So this is the, creme de la creme. This is what you would want to mine any cryptocurrency. However, Monero is built on a protocol that basically rejects using these components. So you can only use your computer or your graphic card from your computer to mine Monero. So just knowing those slight little differences can make or break your investigation. So keeping up with all that is a big challenge. But Stephen, I'd love to hear, your challenges you deal with.
I actually want to piggyback off the OFAC thing. So let's just use someone in the crowd. Dan Webb, I love your name. So let's just say OFAC puts Dan Webb on the SDN list or the sanction list. Law enforcement can't go into the banks and see where they would have to subpoena and see if there's a Dan Webb at a certain bank that's using their financial institution. With crypto, it's completely different. If you put a cryptocurrency address and they label that as an OFAC cryptocurrency address, which they did twice last week, now law enforcement can already see if a Coinbase has any exposure to them. So law enforcement already knows you have certain exposure. So they know at the same time you do, which makes it very difficult because you have to act fast. Whereas the bank can go through their slow internal process to weed out Dan Webb and his activity. And I think that's where it stems, like there's a huge difference between working at a traditional institution versus working at a cryptocurrency industry, because you can see the transactions take place and then they can kind of figure out exactly what other exposure you have and what other transactions. For me, another big thing is that, most users on crypto exchanges already have cryptocurrency Bitcoin, and we all know Bitcoin is used primarily on the dark net. So they already have access to stolen IDs, modified IDs, stolen information. So at a crypto exchange, you're going to see a lot more of that than I feel you would see in the traditional standpoint, because it's non-face-to-face banking or onboarding. I think that's one of the biggest things. You'll see a lot of IDs, and you have to make a decision. Does this look like the person that's not only operating the account, but that's conducting the activity on the account and that originally signed up for the account? Because we've seen that a lot of people sell their actual non-suspicious accounts to criminals in order to already gain that established account within the exchanges. Amber, anything to add?
One of the indicators that I thought was really good was the age-specific indicator. So if your average clientele is 32 and then you have someone that's 82 that's trading crypto every day, that might be an issue. But I kind of have a question for you guys on the investigation side, which is that a lot of folks that deal in virtual currencies tend to be very, very privacy intensive and kind of libertarian in orientation. And so are there any particular flags for you that differentiate between the person who's very passionate about privacy and the person who's being shady? Because I think those blur a lot sometimes.
Melanie, I'll let you start.
Yeah, just because you want more time for your answer. I'm trying to think, because I want to say, oh, you know, it depends if they're forthcoming with their information when you're asking them for KYC, but then no, if they're passionate about KYC, they'll be like, no, I don't need to do this. Like, what are you talking about?
I'll give a quick answer.
I think it's someone passionate about cryptocurrency. Let's say the account's flagged for in and out, privacy coin, VPN, encrypted email, and they're giving me a hard time about giving their KYC. I would then look at the other information I can grab, like let's say one of the coins that was deposited was Bitcoin. Where is it coming from? You know, open source intelligence. What other information can I get? What kind of an idea can I get about this user's profile? Maybe monitor their account activity a little bit more going after that. Yeah, it's hard to get the differentiation, but yeah, it's looking at the other factors outside of the privacy indicators. Because as somebody pointed out in the comments, just using privacy indicators is not enough to trigger an investigation. It's usually the account activity that triggers the investigation, and then those privacy features basically just increase the level of risk.
I think too, the communication, usually people that are hugely privacy centric, they're also very educated as to why they're very privacy centric. And they can explain their process a lot better than a criminal that's just using privacy tools or privacy features to try and do quick actions to get off your account. So I think that's the user communication usually supports people that are privacy centric, have a good understanding of why they're doing what they're doing, and they can give you a trail of what they're doing, even though they're not giving you maybe the essential information you need. So I feel that they're not just privacy centric, they're also very technically savvy.
Yeah, okay, that's fair. Yeah, that explains it a lot better. So they'll still give you a hard time like the criminal, but they'll give you a hard time in a better way. Like what they'll be able to fully explain to you like why they're doing this, whereas the criminal will just be like, I have a sick mother, release my funds, and then if you don't do that, they'll message your company, and then they'll message your customer support like 20 times a day. Go on Reddit, put a post how you're stealing the money. Go on LinkedIn, put a post how you're stealing the money.
Yeah, absolutely. Good points. And Stephen, while you're talking about the investigations and everything, I think I'll just add into something. There's a question by the audience. It says, can you speak to all the apparent hacks or when cryptocurrency seemingly goes missing? And are there any incidences traceable or solvable, or have measures been taken to further secure these blocks?
I think what we've seen recently with the Twitter hack is that it's hard to stay anonymous on the blockchain, to be quite honest. And you saw with the Twitter hack is that the people that were actually involved at the start, before the actual huge hack took place in the celebrity accounts, they were very forthcoming to the New York publications and media about what they were doing, what their involvement was. So although it's synonymous, I think using cryptocurrency, you can see that there's so much eyes on what you're doing. It still makes the process very difficult. Is it impossible? No. But the people that are getting away with these hacks are usually state sponsored based on the reports, and they have a ton of resources and they have a ton of backing from either the country or the state that they're working with. One thing I've noticed differently from before is that when an exchange got hacked, they were very quiet about what happened. They didn't want to notify publicly that they were hacked in fear that people will take advantage of their vulnerability. Now you're seeing exchange publish it right away, because what you won't see is the exchanges actually work together. If somebody hacks and steals $1 million worth of XRP or Ripple, now all the other exchanges are notified immediately, and now we can see if somebody's trying to cash out that Ripple really quickly, we're already on guard. Where before if an exchange got hacked, you wouldn't know about it until 2, 3, 4 days later, or when somebody had trouble withdrawing their funds. So it was really hard for the community to act, and that would lead to them, the criminal, being able to go to other exchanges and really launder their funds, to be quite honest. Amber?
I think the other thing that I would say about that is that when the news of these hacks gets out and the addresses are out there, you see not only exchanges collaborating, and I mean exchanges using tools like Chainalysis and Elliptic and Blockchain Intelligence Group and CipherTrace. So there's all these really great tools for doing blockchain analysis where they're seeing the transactions happen in real time and they're able to follow them. So the degree of investigation is very different from when you're dealing with something where it's gone from a bank to another bank, and now, you know, you're in country B and you need to get, you know, something from law enforcement in that country to be able to properly compel the information. You're just seeing it happen real time on the blockchain. And then there are also, so I've just posted for anyone who wants to play with it, a link to Breadcrumbs, which is a tool for the Ethereum blockchain that lets anyone do investigations, which I think is really fun. And it's a friend of mine's project, and the idea with that is to be open source with attribution data. But you see people, so if there's been a hack against an exchange that I use and my account has been affected, I might also be very interested in doing research around that. And I think that's fascinating. It's led to some really interesting community involvement and community action in these cases.
Yeah, that's a great point. And to answer the question, there's no securing the blockchain more without just mass adoption, because each individual blockchain is secured more based on how much hash rate there is on the network. So the more people you have on it, the more power is being contributed to the blockchain. That's what makes it more secure. However, most of these hacks, you know, Twitter hack and the majority of exchange hacks are not happening because somebody is finding a fault in the code compared to previous, compared to like the early stages of cryptocurrency. Most of these hacks are happening because of phishing attacks. They're happening because, you know, employees, you know, succumbing to social engineering tactics. So it has less to do with the technical security and more to do with, you know, company security. So making sure your security, you're following the best practices, and then some. I've seen some exchanges kind of go above and beyond the security, just so that, you know, their employees are not susceptible to, you know, enabling another hack. So just taking your security very seriously. And yeah, it's also great to have that level of collaboration between exchanges. It's great how quickly we let each other know, you know, stolen funds, or if criminal proceeds are heading like the other's way. Like, we don't divulge any personal information, but it's great to have that level of collaboration. And most of the time when I'm doing an investigation, my user's doing the investigation for me. So often I'll be investigating a case of theft, and there's already a user on Reddit that's already like analyzed the entire trail of funds and already has a story fully broken down on like what's happened. So it's like, I would have been able to figure it out, but it's nice to have it done for me. So it's nice to have these white hack trackers for us.
And I think a good point that Amber made is law enforcement. Law enforcement is actually using the same blockchain analytics companies that the exchanges are using. So you have that instant collaboration, whereas with the banks, you don't see that. Like, the law enforcement or the regulators aren't using the same technology that the banks are for the most part. So working off the same page makes things a lot easier, because you already have all the stakeholders at the table working on the same thing. And you saw that with the Twitter hack. It took 7 days before everything broke down for the criminals. So that collaboration happens instantly, and there's not a lot of red tape, because a lot of the information is not personal information. You're using cryptocurrency addresses. So I think things happen a lot quicker, the turnaround time. And for an investigator, you see the fruits of your labor right away. You see those rewards right away, because the hack happens, and 7 days later, maybe information that you contributed happened. You see it. You see the arrest. You see everything. So I don't think with the banks, I don't remember when I worked for a bank, I don't remember seeing, when I did my investigation, I don't remember them making a press release about that information within a couple of weeks or a couple of days. It usually takes years, to the point where you don't even remember that you worked on the case.
Yeah, that's right. That's right. Good point, Stephen. While we're speaking about hacks and securities, Amber, I believe this question would be posed to you, and it's how would you define cyber-enabled financial crime, and what is the potential of AML and terrorist financing risk in virtual currencies?
It exists. So I think Stephen Scott just made a really interesting comment in the chat, which is that, crime is crime, and sometimes crypto is just the mechanism or the medium that's used for crime. And that's essentially how I would define cyber-enabled crime, is that when you're talking about crime itself, we're not talking about things that are particularly new. It's simply the medium for those things. Is there risk in terms of money laundering and terrorist financing? Absolutely. You can move value quickly across borders. You can move value in a way that is perhaps more difficult for that to be claimed unless you're giving up the private keys in a case like a civil asset forfeiture or a criminal case. And so there are a lot of elements to that that are very attractive to criminals. There are no chargebacks in Bitcoin, which is amazing for me as a merchant who accepts Bitcoin, but also if I'm a criminal who can transfer Bitcoin to myself somehow, that's really attractive because it's harder to claw that back. There are risks there. I think there are also things that make virtual currencies less attractive from that perspective. And part of that is the ability to do blockchain analysis. There are technologies that are privacy enhancing. And I noticed there's a question in the chat that I haven't fully digested yet, but about things like Dash and Monero. And does that make it more difficult to trace? There are a number of privacy enhancing technologies, mixers, tumblers, privacy intensive wallets. None of those things, in my estimation, work particularly well at scale. And what I mean by that is that if I am an international cartel that needs to move millions of dollars on a daily basis, the cryptocurrency markets do not have the depth and breadth that they would need to do that really effectively. Which is not to say that it could never happen, but if you are moving $1 million on chain in Bitcoin, which I'll use as an example because it has the most market share, it would still be really difficult to hide that. Even if you broke the transaction up or sent it through a mixer, you still get into the use of these chain analysis technologies, which can find those points a couple of hops down the road. So if I was to try to hide $1 million transaction, do I think that I could do that particularly effectively at this point? I don't. And similarly, CipherTrace came out with an article a couple of weeks ago, where they talked about being able to do analysis related to Monero based on the available information. And it's not the same as the type of information that you would have on other chains, but they do think that they can get to a point where they can make certain assumptions, particularly at scale, about the types of transactions. I think that we'll have to see how effective that is. We'll have to see what that looks like as cases start to work their way through the courts. And there will always be a bit of an arms race in terms of the privacy enhancing technologies and the ability to do the analysis. But I think that ability to do analysis right now is incredibly strong.
And I think for the analysis too, is like when you're receiving ill-gotten proceeds, let's say in terrorist financing, when it's used in cash, it stops at the person that receives it. So it stops at the criminal that receives it. Whereas on the blockchain, you can see who sent it. You can see what other transactions they've done. So you can really put the pieces of the puzzle together as to who has any kind of connection to that illicit activity that you really can't do with cash. So I think from a law enforcement standpoint, they would much prefer you doing transactions where they have the visibility, where they can use the blockchain analytics tools, and where they can go back in time to kind of put the pieces together. And they don't have to chase people all around the city or to different countries. They can sit at the comfort of their own desk. They can go back to 2015 and start picking apart the networks. And you just don't have that capability with cash, or even a lot of products like wire transfers, because then you have to get subpoenas to every checkpoint that you go to. And I just don't think that process is as clean as it is with the blockchain companies, because they're all using the same tools, and the communication is a lot easier because of the non-use of personal identifying information. All you need is addresses to kind of put those pieces together.
Melanie, would you like to add something?
I'm reading the chat and there's so many great questions coming up. No, nothing to add from my end for that.
Okay, I think we move to the next question. So, and this question is really very interesting, and especially I'd like to hear everybody's thoughts on this. So this is about the recent it's about the recent news on the crypto addresses that was just added to the OFAC SDN list of sanctioned actors. This time, it was associated with the two Russian nationals who stole crypto assets from accounts at crypto exchanges, along with other individuals that were suspected to have interfered in the 2016 US election. It seems that OFAC is sending a strong message that they're aggressively pursuing illicit actors using crypto. So what are your thoughts on this? And do you think that it's an effective strategy? Anyone can start, I believe. Melanie, would you like to start?
Sure. I have a love-hate relationship with the OFAC designations. I think having OFAC designations for cryptocurrency forces exchanges to be accountable for their money laundering program. It does elevate the importance of having a strong AML program, and so it helps us keep each other in line. But at the same time, so some of those cases, like the Russian election interference, the other OFAC designations had a giant their civil document explained the whole process of why this was considered, why these individuals were involved in terrorist financing or the Chinese drug pins, whereas the Russian interference, is this speculation, or how certain are they that these individuals are involved? Because once those addresses are labeled in Chainalysis and other blockchains intelligence tools, it can quickly change a user's profile from low risk to completely prohibited, and it does taint a lot of funds going through. But I think I do like it that it does force exchanges to have that high level of compliance. But Stephen, I'd love to hear your thoughts on it.
Similar to you, I think people kind of laugh at the fact that they put cryptocurrency addresses, because a lot of the pessimists will say, well, the criminals will just use a new cryptocurrency address every time they conduct their transactions, which is true. But I think, as you said, by putting those addresses, now exchanges can go back and see where their exposure lied, see what connections they had. I think it's important, though. I think you have to put those addresses out there. I think the more clusters that Chainalysis and other companies can identify, the better for exchanges. What they'll do with that information. But I agree, sanctions is always one of those funny things where is this a crime or is this more political? So I'm always very hesitant to make those quick decisions when investigating people that have maybe exposure. But from what I've seen, the sanctions, the ones that have been added, I think they have very strong reasons to add them. And it's not just about a political matter. I think there's been crimes that have been committed in those cases. Amber, closing points?
I think that you guys covered it really well. I don't know that I'm going to add anything without sounding like an echo chamber.
That's okay. That's all right. So Amber, I think then I have the next question, which is for you actually. So, so there was last week we saw huge activity in the DeFi space, so much so that Ethereum weekly economic output was higher than Bitcoin's after many years, and DeFi's volume was 20 times the Lightning Network. So what are some of the ways crypto exchanges preparing for such an open and decentralized environment? And is DeFi the end of regulation and start of a truly transparent monetary system? Do you have any advices or thoughts on these?
Oh, I mean, is check yourself before you wreck yourself advice? I'm joking, but I'm not. Both for individuals and exchanges, I think you need to be really aware of what these things are and what they're doing. I think there are going to be some amazing DeFi projects. And I think there are some absolute dumpster fires that we don't even know are dumpster fires yet. But let me just share a couple of things with you as fellow AML geeks. Number one, the FATF has a working group on DeFi. So the Financial Action Task Force is looking into decentralized finance, what needs to happen with decentralized finance. They are on that, they are thinking about it. One of the major questions that's come up, and I'm not a part of the FATF group specifically, so I can't speak to their discussion, but in a number of different contexts, is are things like Uniswap VASPs? So are these virtual asset service providers? Should they be regulated the way that MSBs are regulated in Canada? And what does that look like? There was a draft copy of some European legislation that was leaked last week. It's going to be published in its true draft format next week, so keep an eye on that. But one of the things that it starts to talk about is crypto assets more broadly. And that regulation in the European context isn't something that has to make its way down to each of the countries. It's direct regulation that applies to all of Europe. And that's expected to come in the next couple of years. So we're looking at a much broader definition. We're looking at something that really is considering these, you know, if you're working on a decentralized technology, but there's a company behind it, really looking at the question of, is this a VASP? And if it is, then it needs to be regulated as such. So I think that we have all of these things that are operating right now. And much like how in 2017, we had a bunch of ICOs or initial coin offerings where people were essentially just throwing unregulated securities into the wind and saying, but it's on the blockchain, so it's not a security. And we're seeing securities regulators take a pretty strict view on that. In a lot of cases, we've seen people come to them and say, hey, you have a choice. You can put on this gorgeous orange jumpsuit and spend some time on this very, very comfortable metal bed, or you can give them money back and do some community service. And that's not a pretty choice. I think that some of the DeFi companies that we're seeing today are going to be making that choice a year or two down the road. I think that no matter what you're doing, just saying it's decentralized or it's done through technology is never going to recuse you from regulation. So for anyone that's involved in one of those projects, whether you're an exchange, supporting a project, listing a token, or whether you're an individual that, you know, that's thinking about, do I throw some money at this or not? Caveat emptor. I mean, buyer beware in these situations. You really need to understand what you're dealing with and what the repercussions of that thing are. And then decide, is it within your risk tolerance or not?
That's right.
Melanie, you're much less salty on DeFi than I am, so.
Completely agree with your points. Like, I have a very big, like, professional versus personal opinion of a lot of things crypto. Like, I'm a huge Monero fan, and just the same way I'm a huge DeFi fan as well. Like one of my favorite ones, like not funny, but like one of my personal favorite ones is called Pool It Together, and it's basically a no loss lottery. So a bunch of users will pool their tokens in with each other, and it'll stay in that pool for a period of time, and then interest will accumulate on that pool. And then once, am I frozen? Okay, no, sorry. And then once,
oh, I think, Melanie, we've frozen for a bit. Give it a few seconds. Susan, is she online?
Yeah, she's online. I can see her. She's okay. I think it might be her connection.
I'll add some final thoughts in the meantime while she gets back connected. I think, you know, the DeFi, and it's similar to the ICO things. What I find with regulation is it's very retroactive. So legislators do a really great job of taking new technology and applying old regulation to it. We saw that with FinCEN. Like, oh yeah, Bitcoin, you know, cryptocurrency has been covered since 2013. You should have been following the rules. So to Amber's point, a lot of people like to play in the gray area to start off. But we saw with the SEC, they said, yeah, retroactively, you're going to be penalized for all the things you've been doing for the last 3 years because you didn't follow the regulations that were already in place. So you're not going to see a lot of new legislation. From, in my point, you'll see a lot of application of previous regulations, which will then make you, unfortunately, have to comply retroactively. So I think that's where you see a lot of this money going into these projects, and you just have to, as Amber said, you just have to stand by. The cream always rises to the top. Susan, you know, you were in Dubai for a while. I'm curious as to what you saw in regards to the movement of that kind of technology when it came to financial products like blockchain, cryptocurrency, and DeFi. Is there a big talk from some of the people you still keep in contact with?
Not really, to be honest. I know that, the Bitcoin and, cryptocurrency, it had been like a bit of new, and, the regulator as well, they are not really keen on bringing it along. So there is a huge debate going on. And the country is kind of segregated into different zones, and like let's say the offshore and onshore and regulated and unregulated. So the parts and the sections that, they are keen on doing it and they're keen on bringing it on, they have some regulations that implement it, but the whole, let's say the Central Bank of UAE, which is like the let's say the FIU of let's say the country, they're not publishing anything about the cryptocurrency, and they're banning it totally. So it's a bit of a mix. So yeah, that's I could say Melanie is back. Let me unmute her. Maybe she wants to add some final points as well.
Final points to what? I have no idea where I cut out.
Sorry. So we were talking about the DeFi question that you were just adding some thoughts into it. So I guess you can just
yeah,
share.
to wrap up my tangent, closing thoughts, there's always going to answer the question, there's always going to be a need for the centralized exchanges as, cash in and cash out points. And a lot of the exchanges, how they're tackling DeFi is they're working on products that are completely DeFi. Binance has their own DeFi, they have their own decentralized blockchain now. And a lot of crypto exchanges are working on completely decentralized products to offer their users instead of just their central platform. But there's always going to be a need for the centralized exchanges, both for cash in, cash out points and for liquidity. That being like one of the main reasons why that would be needed there, and also just for the trading functionality. Some offer some really cool trading functionalities. I'm sure some DeFi projects are going to evolve over the years, but definitely I'm going to say short, like 5 years short term, because I can never say never in this space. Anytime I say, oh, that doesn't work, this product can't do that. Oh, there's a product now that allows it to do exactly what I just said can't do it. But I would say definitely like 5 years. I'm going to go with that. That's like 50 years in crypto. There's always going to be a need for centralized exchanges.
Thank you, Melanie, and stay with me this time because I have a couple of questions from the audience. So
yes,
I will start with this one. This is a good question. How much money laundering, terrorist financing is done through fiat with traditional methods of layering?
I absolutely have no idea. I know the numbers are in the trillions for that, but in cryptocurrency, that I can give you a figure for. Hello?
Yeah.
Okay, yeah, that would be fine.
Yeah, I can't give you an answer for traditional finance. I know it's in the trillions, but cryptocurrency specifically, like last year in Bitcoin, Litecoin, Bitcoin Cash, and quite a few others, only 1% of crypto transactions were related to illicit activity that had been identified for the most part. Like I'm sure tax evasion, some of that was not caught under the radar, but only 1% of transactions were connected to illicit activity, which is about $11 billion in 2019.
But aren't law enforcement requests in terms of just fiat transactions, when we talk about what percentage of the economy is affected by money laundering, in the 2 to 5% range, if I'm not mistaken? Mm-hmm. And that's, I think, from one of the recent either RCMP or World Bank estimates.
Yeah, somewhere around that.
So less so.
Yeah.
Okay. One of the things that I think is really interesting when we talk about, virtual currency and virtual assets is this ability to actually know and to actually scope. So I know that I sounded really salty about ICOs, but I actually think that there's a pretty fantastic use case for digitized, fully digitized, digitally native securities that are done properly and done as securities, which is that exactly how many shares can be issued and you have fractional shares. So there are these really fantastic use cases that I don't think we've fully explored yet, but a lot of companies are working on. So yeah. I think it's something that's reflected in the chat as well, that even though there's a lot of things that right now aren't mature yet, I think that we'll see in the long term some really fabulous projects.
I feel there's like three stages of money laundering. There's three stages to anything new in crypto. There's the initial development of a new feature or product, where people who believe in it invest into it. Then stage 3, where it starts to really take off in popularity or specifically price. Then you have everyone joining in from fear of missing out. But during the stage, there's also a lot of the more scammy or definitely not getting into the project for the belief in the technology, but more just to try to get money out of it. And then stage 3, a bunch of people drop off, and then what remains is a better product, because those left behind are actually working to make a great product and not looking to just make money. And I think DeFi is going to be the same thing. We've seen it with ICO, and we've seen it with other technologies before for cryptocurrency.
Yeah, absolutely right. Thanks, Melanie. Another question from the audience I have is, how can you decide that a person or entity who participated in a blockchain transaction is legitimate or not? That is, whether it's usual or not. So, Steve, Melanie, anyone? Amber?
I'll let Steven go first on that one.
Sorry, I didn't understand the question. How can you decide who the person is, or how do you decide if the trend?
So the question is, how can you decide that person or entity who participated in a blockchain transaction is legitimate or not? So that is whether it's usual or not. That's the question.
The activity is usual or not? For me, it's the same thing. Like as Amber was saying before, and the chat was saying before, cryptocurrency is just a medium of payment for the most part. So the same rules apply. Many of the indicators, I think a lot of people said, many of the indicators that we saw in the FATF report are pretty much indicators they can copy and paste from any kind of financial product. So I think you go about it with the same ways. I think for exchanges, it's a little different. Let's just say you have a trading cryptocurrency exchange. If someone's moving crypto on and off the exchange without actually using the trading features, then it would raise more suspicion than, let's just say, you're a normal exchange where you're not really viable. Trading activity is not really that viable on your exchange. So I think you have to take a look at the context a lot when it comes to determining whether it's usual activity or not. I think most times it's pretty easy to determine just by the activity and user communication what kind of activity. But it's hard with cryptocurrency, right? Someone moving funds, you have to know the context of the situation. We saw a lot when the SegWit 2, I believe, they postponed it. A lot of people moved money on or moved crypto onto the exchanges so that they can be rewarded with extra Bitcoin Cash, I think at the time. Once it gets postponed, they want to move that cryptocurrency back off the exchange, because to Melanie's point, they don't want to keep it there for security features. So you really have to understand what's going around in the ecosystem so that you can apply that same contextual situation to your specific circumstances, whether you're working at an exchange or a financial institution that touches crypto.
Yeah, that's an excellent point. And just to add to that is, you keep asking yourself, I asked myself the same question, I think 5 times during an investigation: does this make sense? And that's where, it's important to keep up with the latest tools and technologies in the crypto space, kind of understanding what each exchange offers, or at least having a vague idea. Like, I know this exchange here is kind of just known for an on and off ramp. They don't really offer any good trading features. So for them, it's going to be normal to have funds coming in and out fiat to crypto. That's going to be completely normal. So they're going to have to look at other things for suspicious indicators. But for platforms like Bitfinex, Kraken, and quite a few others, where their focus is on trading features, a lot of very intricate and interesting ones, and these are very complicated to use platforms, that doesn't make sense to just have in and out funds just going in and out, because that is not why you would use our platform. So you have to look at, does it make sense for this user to be doing this activity with this specific product, with these specific coins, with this specific user identity? And we have a disadvantage when it comes to KYC. Like Steven said, they have a million accesses to different options to Photoshop their KYC. They don't need to meet us in person, but we have an advantage when it comes to seeing their activity off the platform. Besides Monero, we can pretty much trace what services they've used, where they've been to. We can even peek into their accounts at some exchanges. So we have that advantage there. So it's just, does it make sense?
I think that's the burning question. Does it make sense? So,
always.
I know. Do you like to add anything, Amber?
No, I think that was fantastic. And I would emphasize the point that Melanie just made about you can see a lot of the history, especially when you're receiving virtual currency. Even before there were chain analysis tools, I remember one of my clients asking about, we have someone coming in and they're really young and they're claiming that these Bitcoins that are coming in are from mining. And I thought, okay, we can look at it on chain. So we can see, is this a freshly mined, freshly minted coin? Or when we look at this wallet, is there a long history of ins and outs and transactions and different things? And it was pretty easy to tell which folks were legitimate miners or not, even in the absence of chain analysis tools.
Yeah, and for those in the audience, like what Amber's saying by you can see if they're newly created coins, like you can actually see on block explorers, like if you look up a transaction, like it'll actually say like these are newly created coins. So like it's very easy to verify, like is this actually a miner or is there like a long history behind these transactions? And if because the mining proceeds are going to go to a crypto address, it's easy to verify that you're the owner of that address by just signing a transaction, signing a message. And pretty much all wallet service providers offer that option, like a very user-friendly interface of doing that, to prove that you are the operator of those private keys. Just to add context for the audience.
So Melanie, while we're talking about that, I think this question would really relate to this. So how well can regulators extend control given the volume and geographic diversity of transactions taking place on the block?
It's a very tough question to answer. I feel that regulators definitely need to focus on the companies and the individuals running certain technologies and products, and not necessarily on regulating the blockchain itself, because it's not going to happen. Nobody owns nobody owns or maintains the blockchain just like an individual or a company. So they really need to focus on virtual asset service providers, and now with the emergence of DeFi, like they need to focus on the individuals conducting activity and not the technology itself. Because I read I feel they're fear-mongering articles where just they kind of focus on we need to regulate the technology itself and not the individuals behind it. Like there needs to be a lot more that goes into enforcing virtual asset service provider regulations versus just completely shutting down the idea of like accepting the technology itself, kind of thing. But Stephen, I'd love to hear your thoughts on that really hard, very, very broad question.
I think you're right, and I want to add, like, you don't have to focus on all the VASP. You don't have to go after all the exchanges. You just have to go after the big ones. It's almost like correspondent banking. The regulators aren't going after the mom and pop banks in in the middle of Mexico. They're just going to go after whoever their correspondent banking partners and make sure that they go hard on them. So all they really have to do is go after the top 10 to 15 exchanges and press them and make sure their regulations and their transactions. Because if some other exchange in a jurisdiction that has lax AML regulations when it comes to cryptocurrency isn't following the rules, is the big exchanges really going to risk losing their banking partners and their ability to convert to USD, which is still one of the biggest fiat currencies in the world? Probably not. So it's going to force the exchanges that aren't following the rules and aren't compliant. They're going to basically cut off their sources to liquidity, which is still the big exchanges. Many of these small exchanges need the top 10, 15 exchanges to get access to large volumes of cryptocurrency. So if you cut off those that access, that's all regulators really have to do. And we're seeing that a lot in the United States. Coinbase, Gemini, all those are, the regulators are keeping pretty tight tabs on them. Mm-hmm. Amber?
I think I would add to that something that the Financial Action Task Force said in their guidance on virtual assets and virtual asset service providers that's often overlooked is that they don't advocate for an outright ban. And where there is a ban, so member jurisdictions do absolutely have the option to say that you can't have a virtual asset service provider, you can't have virtual assets or a particular type of virtual assets. Where that's the case, there must be some type of enforcement. And so the idea is that you can't simply have an edict that says it's prohibited, ergo no one does it. There must be something that enforces that. And I I think about human history and prohibition and how wonderfully effective it is, like how we had that war on drugs and now there are no drugs. I'm just kidding. And I'm really proud of the approach that we've taken in Canada vis-a-vis marijuana, where we said, you know what, this isn't something that's harmful. Let's regulate it. Let's tax it. There's incredible revenue coming into the government based on that. We have less people that are going to prison for something that's essentially stupid and something that, you know, a lot of the population does. I don't really smoke pot. I'm not advocating for it. I don't care, you know, I don't care about that. It's not important to me one way or another, except that I think that it's incredibly beneficial for countries and for financial systems to look at the efficacy of regulation, to look at the harm reduction of regulation, to look at the overall impact of regulation. I don't necessarily think that enforcing an out-and-out ban is going to be effective for any country or any jurisdiction. I don't even necessarily think that it's going to be possible to do that, much like most things that are out-and-out prohibitions. It's big and expensive and difficult, and it's probably not going to be effective. So I think, really, like Stephen said, figure out how to concentrate your efforts and how to do things effectively, and things will fall into place.
Right.
Yeah.
Sure, go
and
ahead.
just to add to Amber's, because she just made me realize something as well, like to add to her point, the majority of my clients and other exchanges, the majority of their users are individuals from areas that prohibit the use of cryptocurrency, that outright ban it. So just to show you like how much we're very much like teenagers who love to rebel when we're told we cannot do something. So yeah, that outright banning, it doesn't work, especially with how crypto works. Like, it absolutely does not work.
Right. So, well, while we're on the cryptocurrency topic, I'd like to speak about Libra also. So there was a question from the audience. It was like, what is your opinion on the Facebook launching its own cryptocurrency, Libra? I know it's been a time, it's been a while since it was launched, but we'd like to hear your thoughts about it. Do the regulators do not appear to be in support of it at the moment? So do you think that they will be open to this idea in the future? Steve, do you want to start?
I don't really have, I don't really have too much to say about Libra, to be quite honest. I think when, similar to what Amber said, when it comes to cannabis, it's funny how it went from a banned substance to an essential service within 3 months. So we saw with the pandemic lockdown, all of a sudden now the government cannabis retailers was an essential service, because what about the poor people that rely on it? But, 5 months ago, it was, you have a dime bag and you're walking around with it, you might get drop kicked by a police officer. So I think similar to Libra, I think government wants to hold their hand through the whole process because the government's trying to figure out how they can profit off of it. And they know the extent that Facebook has with Instagram and all the other products they have. I don't think they want to give them an outright control of what they're doing without following along with them. And then when it's profitable for the government as a whole, I believe, then they'll allow them to kind of roll out what they want. But they're not going to, they saw how quickly I think social media spread, where the government really has it's so hard to regulate social media right now. They don't want to see that happen with any kind of financial services that has the same magnitude and the same reach as social media. Amber, your thoughts?
I would agree with that completely. I think that's about power. That's about control. When you look at the paper that came out where they talked about global stable coins, so it wasn't, we're not talking about Tether. We're not talking about QCAD. We're not talking about these sort of stable coins that crypto users are used to. We're really talking about things that have this potential for a deeper global impact, for a shift in power from governments to technology companies, which is something that's really seen as undesirable. It's seen as undesirable by governments. It's seen as undesirable by the central banking system. And so when we're talking about global stablecoins, I think that's something that was really brought about by what Libra is trying to do, and by specifically the lack of engagement by or with governments and with central banks in that project. I think that we will see something that will end up coming out in terms of true global stablecoins. But I think for that not to be blocked from a regulatory perspective, there is really going to need to be solid engagement with governments and with central banks. I don't think that's going to be a pure play on the part of technology companies. There's too much risk.
Yeah, Stephen and Amber pretty much answered it perfectly from the regulators, from the regulatory point from that question. From the user perspective, I mean, I'm not a fan of Libra just because of the companies behind it. I'm not a huge Facebook fan, but I do love the influence it has. Like somebody pointed out in the comment, it has spurred quite the race around the world to get every country have like their own digital currency, which I think stable coins for me are a developed country creation, but is meant for an underdeveloped country, for those that, you know, where 75% of the population does not have a bank account or does not have access to internet. A lot of projects are in the works where, like Venezuela has the mesh network that allows users like within, as long as you're within 1,000 meters from each other, you don't need to have direct internet access on your phone, but as long as you're within 1,000 meters of somebody else who does, and if that person is within 1,000 meters of somebody else, you're able to conduct these transactions online using these coins, especially in an environment where, you know, we have a hyperinflation and such a volatile economic situation. Amber, do you have any points to add to that?
And I think that's entirely accurate. I heard just a statistic. So I'm quoting Charles Hoskinson. I don't have a thing that I can point to link-wise, but he was saying that roughly 82% of central banks are investigating virtual currencies, which is, that's huge. That's tremendous. I just want whatever is launched to function better than the Phoenix system. So I hope they get the right builders.
Agreed on that. It definitely linked it. Access needs to be a lot better. Was somebody I know that's from South Africa was saying, like, majority of banks, like, it's not like here it's here in Canada where, you know, there's a branch on every corner of the street. Most public transportation costs like Canadian equivalents like $50 just to go one way somewhere, and that's not a far trip. And most banks are located like 2-3 hours away from the individual. So, like, to put that into perspective, like, there is absolutely like no reasonable way for you to be able to get to that bank to verify yourself to get an account or have access to those financial services without completely putting yourself and your family in jeopardy. Just to put that into, you know, perspective, after having like that very heart-wrenching conversation with that individual.
Wow, thank you, Melanie. Thank you, Amber. Thank you, Steve. I have one more question though. So this is, there are a lot of preconceived ideas about virtual currency, like their usage for dark web purchases, money laundering. So what's your take on it?
I'll take point on that. And somebody mentioned in the comment, that was exactly the point I was going to make. Crypto is a medium. It's a tool. It's technology. The preconceived notion on it, I mean, it doesn't help when every other article on cryptocurrency is about, you know, it being used for criminal proceeds. So there is, for someone who is not in cryptocurrency, that's all you see. Of course, you're going to have that preconceived notion that all it's used for is criminal activity, but it's just technology. It's just a medium. It's completely neutral. How it's used differs person to person, and studies like Chainalysis, Cypher, Trace, and Elliptic have done show that the 99% of crypto users are not using this for criminal activity whatsoever. Like, obviously there is still criminal activity being done with it, just as there is with US dollars and anything else that offers that option for criminals to take. But I think that preconceived notion can go away just with time. It's just going to take time. It's going to take more time for mass adoption to pull through, but just there needs to be more education around it. I was reading another report that just in Asia, those who want to get into it, they'll just go to the kind of the first thing that allows them to learn about technology, but often these companies that are offering this training kind of have like a hidden agenda behind it. They get those individuals to sign up on their platform. I'm using Plus Token here as an example. and then only conducted like an exit scam or, you know, a Ponzi scheme a few years later. So just there needs to be more access to education on it to get rid of that preconceived notion.
Right. Steve, would you like to add something to it?
Not much, you know. I think it's just like any other financial product. You're going to see the scams. You're going to see the things. I think with cryptocurrencies is what I find interesting is that people will spend so much time, you know, to write a review, but they'll, or you know, on Reddit or anything like that, or when you purchase a car, you spend so much time reviewing, but people have no problem parting ways with thousands and millions of dollars in order to get rich off an ICO scheme. So I feel like with crypto, there's a lot less people putting in the time and energy to educate themselves on it, and they just see the price going up and they just want to jump in on it. So I think it's one of those things where, to Amber's point, you have to be a little bit more cautious, but I feel people throw caution to the wind when getting into crypto versus other financial products. And I guess because the rate of the return on investment can be so high, but it's usually high for the people that have already taken risks, lost some money, and are committed to the long-term process of investing in crypto versus someone just making $1 million because they invested at the start of 2017 and cashed out at the end of 2017, which just wasn't the case for the majority of people.
Yeah, fear of missing out is a big pusher for that, and I get it. I completely get it. One of the coins, I forget the name of it. I think it's Comp, rose 200% in value from last year August to last month. 200%. You put $1,000 in last year, you would have had $200,000. So I get that fear of missing out big time, but it does make it that, you know, a lot of people kind of come in blind and they're okay with that because, you know, there's a big chance to make money here.
Wow, right. Amber, would you like to add something? Some final thoughts?
I think that that's been covered really well. There are a lot of fantastic legitimate uses. There are a lot of reasons that legitimate merchants want to use virtual currencies. There's a lot of reasons that criminals want to use them. I think Stephen Scott made a really good point in the chat, and his background is in policing, which is that criminal, as in his words, criminal transactions are based on trust and fear. And so when you're looking at these things, you have parties that need to transact in a certain way. It's often enforced by things like violence, and virtual currency isn't necessarily a great medium for those things. One of the really interesting things that I know Dwayne King has focused on previously is that there's a real shift in certain drug markets in terms of how things are bought and sold, how people interact with one another, and the types of criminals that are involved in that, where in a funny way, it's actually a safer environment in that there's less violence, there's less product being shipped that isn't, and mind you, the product is illegal, but the product being shipped is what the shipper is saying that it is, which I think is really interesting when compared to traditional criminal markets. So there are some, even though we're AML geeks and we're talking about something that's illegal, there are some really interesting harm reduction effects as a knock-on of those shifts.
All right, good points, Amber. Thank you. We have a bit of more time. I think I'll just squeeze in one question more because we have a raffle draw towards the end of the session also. So this question is more like career-based. It's more like for any AML professional who's working in traditional banking who wants to move into crypto exchanges, what can they do to upgrade themselves? What sort of certification is out there? What kind of field they should be going for? What are your thoughts on that?
I'll take the lead on just because I did prepare a handout for a previous session on links to different certifications, different reading lists, different YouTube channels. And although I've been in mining since 2015, and that's how I kind of got into crypto, I barely knew anything about what I was doing with mining. I just connected my computer to a mining pool and I told it to mine Monero for me, okay? But how you can upgrade yourself, know the product, like create an account on an exchange or get a private wallet, use the product. Being able, like, one of the first things I look for in interviews is you don't have to know everything by heart. You don't have to be able to name me every token there is, but do you know the difference between a private wallet, you know, a hot wallet, a cold wallet? Can you explain to me how a transaction works? And all that, you don't have to pay top dollars for certification to get this information. One of my favorite YouTube series is by 99 Bitcoins, which the link is on that handout. Anybody who wants a copy of it, just message Susan. 99 Bitcoins. I always watch their videos anytime I want to understand something that's just been newly released, or if I want to just Bitcoin 101 refresh. Like, that's who I go to. I don't pay money for the big certifications. I paid for the CBP because, you know, just I guess I should have that, but like all the knowledge I have is from those YouTube series or those reading lists. And that's the beauty of tech. It's just the information is out there, and you don't need to pay top dollars to be able to access all the information. And, you know, regulators are making a point to release all these guidances like the FATF is doing with the list of suspicious indicators. That in combination with technical knowledge from those other resources is all you need to get into the space. And, you know, like chat, you know, message other AML professionals in crypto to figure out, you know, what's the career landscape looking like, because some of the exchanges do not post when an AML position is up. A lot of them don't do that just for name a reason, but just, you know, connect yourself with individuals such as like myself, Amber, Steven, and we can kind of, sometimes they do have insider information of just, oh, I know this exchange is looking to hire, or as Steven said, best thing you can do, just send your resume to a company you want to work for, even if they don't even have an AML department yet. Let them know that you're interested and this is what you can offer them. Sometimes you can create your own positions. But I think Stephen is probably the best here for career advice.
No, you know, like that's it. Honestly, I'm not that technical. I don't think I actually went down the rabbit hole, to be quite honest. I just figured out, and then now working with an exchanges, I feel that, and I think me and Amber talked about this before, it's a lot easier to teach a compliance person cryptocurrency than to teach a cryptocurrency person compliance and AML investigations. You know, I think me and Miriam talked yesterday. I've talked to so many professionals like, oh, I don't know enough. You don't need to know as much as you think you do. When I got into this field, enthusiasm was the barrier to get in. Like, if you really wanted to learn it, if you're one of those people that will pick up the phone and call FinTrack to get answers, I think you'll be fine in this area. But a lot of people don't apply to possible positions because they think that they need a wealth of crypto experience. And yes, there's a couple certifications. Honestly, I just tell people, pay for the certifications, get enrolled for the most part, just so it looks like you have some kind of background in it. But my suggestion is for anyone that wants to get involved is just start now. Like, go out there and find people that will help you. But more importantly, don't think that don't have the ability to apply. Me and Melanie have spoke to several people that have had interviews and even got jobs at some of the top exchanges in the world, and they had zero cryptocurrency experience, but they had the confidence to go out there and put themselves forward because they knew that they would figure it out. But if you already have that as something holding you back, they'll be able to tell right away in the interview that you're just not going to be cut out. You're not going to want to find the answers. And I think that's most important. Amber?
Yeah, I agree with everything that you're saying. And the thing I would add to that is, like, most of crypto is open source. Your invitation is already here. It did not get lost in the mail. Don't wait for someone to hold your hand and teach you these things. The first thing that I did in the crypto space was in 2013. And a friend of mine who was doing payment processing at the time said, hey, I want you to update my risk assessment. I'm doing all this processing for a Bitcoin exchange. And I was like, yeah, I've read about it in Wired. I don't know much about it. Can you pay my retainer in Bitcoin? Because then that's going to force me to, and everybody always asked, did I keep it in? Like, no, I bought a tablet that got promptly forgotten on a plane, and I have my own little Bitcoin pizza day. But get it, like, get your hands on some crypto. Use a Bitcoin ATM, use an exchange, figure out how these things are working, play in the space. Because I think if you're saying that you're interested, but you've never interacted with virtual currency, then I think it's really difficult to get your head around it. So, you know, show the interest, play with it, look at all of the materials that are online. Don't wait for someone to coach you into it, and then bring your existing skills into that. So whatever your background is, whether it's AML investigations or fraud investigations, you know, across the board, all of these exchanges really need folks that understand how crime works, how a proper investigation works, how proper regulatory reporting works. So the crypto piece of it, learn, but bring all of your existing skills into that conversation. And when my exchange clients ask me about who they should hire for compliance positions, my answer is 100% of the time, try to steal a banker. Try to get someone who is going to understand the regulatory context, both in terms of what the regulator wants from you and in terms of what your bank wants from you. Because maintaining those financial service provider relationships is always a big struggle for the exchanges as well. So someone who can look at a questionnaire from BMO and say, oh, when they ask this question, here's what they're looking for in terms of your answer. That's worth a lot. Do not undervalue that skill set.
I want to add, I knew I was going to come back to this. I wanted to be quite quick. Honestly, like if you want a job right now in crypto, look at the hardest regulation that's coming in, like something like 5 AMLD, something that's super hard. Learn as much as you can about it in 30 days and apply to every exchange that you see in that ecosystem. Because right now, that's not, like nobody's going to do that. And now everyone's working remotely. So you can kind of go in and say, honestly, I know you probably want people in the office. I can work remotely. Your whole team's working remotely. We can connect. But here's all the things that you need to know about this regulation. Game over. You already got a job, guaranteed. But you know, you have to be the one that's going to put in the work to do it. But you'll bypass everyone else because nobody else is doing that right now because it's hard.
Yeah, absolutely right, Steve. Oh, sure. Go ahead, Melanie.
Oh, no. Definitely interesting. Like, I definitely a great, definitely check out Stephen's previous webinar on building your brand and your career for a lot more career-oriented advice. Because you definitely give some of the best. And yeah, Amber has a great point. Like just being able to understand, like, yeah, when they ask this is what they want. I didn't realize how crucial that was until I went through an audit.
Yeah, for sure. I think I'm going to go watch all those YouTube videos, like you said, Melanie. Definitely.
Oh, they're fantastic. He explains things so well. And of course, Andreas, Stephen, help me on the last name. I can never, the French hinders me. I can't pronounce. Thank you. Oh, no. I can't pronounce it. He is like pretty much like the father of cryptocurrency education. Like he explains things just so well. So a combination of 99 Bitcoins and Andreas's personal YouTube channel, over 500 videos worth of content. Like that'll get your crypto education. And the other day I was just talking with somebody who's kind of interested in getting into the crypto AML space. And I sent her $20 to a private wallet that I forced her to create. And after she received it, she was just like, oh, that's it? Like that's all there is to it? Like, I think people kind of overestimate like overestimate how technical and how difficult the process is. It's very simple. If you can do an e-transfer, you can
I was one of them actually. Yeah, I was one of them. I used to think the same thing.
I'm going to actually put my cryptocurrency address in the chat.
Are you looking for tips?
I was going to put it in chat. Let's practice. Everyone on the call, let's put $20 towards Stephen Sargent's cryptocurrency address. Let's just practice using that, you know? Let's practitioners, guys.
Let's help him get to $200,000 salary this year, you know, as your post back
exactly.
earlier in the year.
Exactly.
All right. Thank you so much, Steve, Amber, Melanie. We're almost on time, actually. And I'm sure we have some time for a raffle draw as well. So it was really great having you here. I hope our audience really enjoyed the session. They definitely learned a lot because I did too. I for sure know now it's not that technical. It was very easy, just like Melanie said. I will make sure I read more of that stuff then. So Susan, over to you. Would you go ahead? You can go ahead with the raffle draw.
Sure, of course. I think Melanie was just mentioning about the king of the crypto, Andreas, and Amber and the Outlier compliance group gave everyone the chance to go into the raffle draw and basically get one of his books, which are very interesting and very awesome. Some of his books, I'm sure that you might have heard, The Internet of Money, Mastering Bitcoin, and the Bitcoin Standards, and many more. So you got a chance, to win that. So let's see who would be the lucky winner.
We're really forcing people to learn crypto.
Yeah, so what I'm gonna do is that what I've done, I put all your names in a wheel. Let me share my screen. Let me know. Can you see my screen?
Yeah.
Okay, cool. So I have put down all your names here, so we can start the raffle and see who would be the winner. Okay.
Is it
Ready?
only one draw, or will you do it 2 or 3 times?
No, we're gonna have one draw this time.
Are speakers illegible?
No, the speakers are not eligible, unfortunately. Especially you. I should have removed you, Melanie, but I didn't. So.
Oh, it's fine. It's fine. I'll just
But
please
yeah,
spin
if
if you land
you
on me.
come in, if you, Stephen, or Amber and Mariam comes in, we do another one, and me as well. So I will not. So let's get started. Okay, 1, 2, 3. Here we go.
This is so cool.
Yeah, it is so cool. Let's see who would.
I love technology.
Oh, Karan. Well done. Well done. I was seeing that he is so active on the chat as well. So I think he would be really happy to see that, you know, he got that. So yeah, congratulations, Karan. Well done. We will be sending you the code and you will be able, you know, to get your prize. Awesome. So thank you, everyone, and congratulations, Karan. I hope that you enjoy your gift, and thank you so much, everyone. Thank you for joining, all the attendees, and as well thank you, our great panelists. I'm sure that this this panel was very informative. I'm sure that a lot of information you got and obtained from this session. If anyone wants to get the handout, which Melanie mentioned, just send me an email on info@tcae.ca and I will send that to you. Also, I think for those who has been asking for some of the basics about crypto, Melanie did a great session. It was our second Knowledge Series session in, I think it was in April that she did. So make sure to go and watch the recording of the session. It's very informative for anyone who wants to start from Blockchain 101. And yeah, so
oh, and the juicy one, the cryptocurrency criminals.
Yeah.
If you're interested about hearing what kind of crimes we see.
Yeah, absolutely. And thank you so much. Thanks, Amber. It was really great to have you. It's an honor, honestly, you know, to have you in our sessions. You're
my goodness. It's an absolute pleasure.
You know,
Anytime.
It's honestly, it's an absolute pleasure to have 3 of you in one room. It's really rare to have the 3 best, you know, in one room. So it's really awesome that we had the opportunity to gather you all. And so thanks a lot for making the time and coming. Stephen, Melanie, you guys are awesome, and thanks a lot. And Mariam, thanks for doing the moderator, the difficult the difficult role and
Great
task.
job.
So that was really great. Thanks a lot for keeping us on time. And yeah, for the people who they are waiting to receive the certificate, they will receive a test at the end of this. We are gonna send you an email by end of today with a mini test, and then once you do your test about what we discussed today, you will receive a certificate of attendance as well.
Susan, thank you, man. This has been, you know, just seeing the people in the chat, definitely the reach from Malaysia to South Africa, some of the best, I think, crypto people in the industry that have compliance experience. Marie in Montreal, I think you've done a great job of really bringing this global game up a notch, and the engagement has been amazing.
Thanks.
So we appreciate you creating the platform for us to have something
so
to do on a Saturday morning.
Thanks, guys. Yeah, I really appreciate it. Honestly, that is has been my goal and vision, and I just wanted to make it approachable, you know, for everyone, you know, to gain that knowledge and information from all over the world. So so with that, let's end our session, and thanks everyone for joining, and I hope to see you next week.
Enjoy your weekend, everyone.
All right, guys, have a great weekend.
Great weekend.
Cheers,
Bye.
guys.
Kendall.
All right.